Hi everyone, welcome to episode 73 of the Startup Playbook podcast. My name is Rohit Bhargava, and each week I interview successful founders, investors, and subject matter experts on how they got started, the strategies they use to succeed, and their advice to current and future entrepreneurs. My guest for this episode is Will Richardson, the managing partner at Giant Leap Fund and head of venture capital at the Impact Investment Group. Will spent several years in the private equity space before searching for something more in line with his values and passion. This search led him to the impact investment industry, and through a series of 50 coffees came across the Impact Investment Group, a leading Australian impact investments fund manager that shifts capital towards investments that blend financial returns with deep social and environmental impact. Will is now the head of venture capital at the Impact Investment Group and is the managing partner at Giant Leap Fund, Australia's first 100% impact venture capital fund. Through the $14 million fund, Giant Leap Fund has invested in local companies such as Sendle, Your Grocer, Glam Corner, and Switch. In this interview, we talk about the power of introductions, the misconceptions of impact investment, the three things that Giant Leap Fund looks for when investing in startups, and the benefits of effective storytelling. Without further ado, here is my interview with Will Richardson. Hi, Will. Welcome to the Startup Playbook podcast, and thanks for taking the time to be on the show today.
Hi, Rohit. Thanks for having me.
So for those people that may not be as familiar with you or your background, do you want to share a little bit about your story and what got you here today?
Sure. So I guess I'll start with my life just prior to the Impact Investment Group. So I worked at a private equity firm for about 7 years, and I think it was from watching a whole lot of really bad Wall Street movies when I was a kid that I thought that was my destiny. And when I got there, I loved it. I was learning a heap of stuff. Did learn a lot about capital raising, debt raisings, restructures, IPOing companies, but I felt like I hit this point where I was sort of plateauing in terms of learning, and I got pretty bored, and so I just started searching for something that I would find more fulfilling. And that took me on a path of probably about 50 coffees with people around Australia and even overseas, and went to a whole lot of conferences here and there. And the two things that really sort of excited me over that couple of years, that seeking journey, was impact investing. So the attempt to generate positive financial returns alongside positive social environmental impact. And the second thing was this incredible organisation called Small Giants, who seemed to be at the forefront of impact investing, who actually were from my hometown in Melbourne. So it was quite a beautiful confluence of events. And I was introduced to this group, to Small Giants, and helped them out with a little project that they were working on. And we got to know one another, and they said, what were your skills, Will? I explained, investing and working with families and companies, and what was I passionate about? I was passionate about pursuing this sort of abstract concept at the time called impact investing, and they said, hey, that's wonderful. We're actually working on pulling together an impact funds management business to help take what we've been doing for the past couple of years, so aligning all of their investments with their values, to others, because they've just seen this huge amount of demand from their friends and families, members seeking to do something similar. So that's what brought me to the Impact Investment Group, which is Australia's largest impact investment fund manager. We operate across the asset classes of venture capital, real estate, and infrastructure. And Giant Leap is the fund that I work on with Adam Milgram, Peter Cameron, and Kylie Charlton, who are the venture partners behind the fund, seeking out impact startups for our fund.
Fantastic. Obviously, I want to come back to some of the things that Giant Leap specifically is doing, and some of the broader work that the Impact Investment Group's sort of involved with. But something that kind of stuck out to me was you were saying that you felt really unfulfilled, and you went on a journey of about 50 coffees, which I don't think enough people spend time or go to the effort of trying to reach out to as many people as possible, or just looking for, are in that process of looking for their next thing or something that really fulfills them, but not really sure about how to go about that. What would be your advice to someone, and what sort of worked for you in terms of those 50 coffees? What was the process? What was kind of the learning that you took away that eventually got you to finding Small Giants?
We could talk for a whole podcast just about this, but a couple of things that I find really helpful. There are so many smart people out there who have done things before you, they've seen problems that you're facing that can help you sort of explain how they overcame those problems. So the real purpose of me having 50 coffees was to find people who were further along the path than me, and trying to hack my way through the process. And typically, how I approach it, I ask people in my immediate friends, family, sort of associates, for warm introductions to people that inspire me or I'd aspire to be like, and then go down, visit the person, buy them a coffee, and at the end of it, I typically will ask that person for another introduction to someone else that can help me along the way. So that's really useful. Something else I find useful is taking a portfolio approach. When I started out, I think in 2012, trying to find what inspired me, I thought it could be moving into the not-for-profit world. I thought it could be moving overseas to work on a big project. And what I decided to do was actually just prototype little projects where it was a low investment of my time and low risk if it didn't go well, but would give me a whole lot more insight into whether I wanted to pursue a path. So they're sort of the two things that I find really helpful.
Absolutely. I think just kind of honing in on that, I think so many people are afraid to take a decision because they're afraid of making the wrong one. So, they say, I might head down the not-for-profit path or I might head down the impact path, but I'm not sure, so I won't make a decision. I will kind of stay stagnant versus making the wrong decision. And I think your approach of at least trying the small projects at least gave you an insight into what it would be like heading into that space and giving you some sort of insight into whether that was something that you were really passionate about, assuming that's kind of how it worked.
That is true, but I think something else that pushed me was that I spoke to my friends and my family and I complained constantly about not being happy with something, and they essentially just push you as well. They're like, stop talking about it, go do something. So there's, I think it's very natural when you're feeling safe and comfortable to desire something, but not to actually take any concrete action. People giving you feedback that you've actually got to do something can be really helpful at times.
Sure, and you mentioned that you were looking to meet with people that were ahead of you in the journey. What is it specifically that you were looking for in those people?
So at the time, impact investing was, you could Google it and you couldn't actually find that much stuff. But there was an organisation in Australia called Social Ventures Australia who had been working on creating this blended financial instrument for years. So I wanted to speak to one of the founders of that organisation called Jan Owen because she had been working in this stuff day to day. So I got an introduction to her to really just learn, I guess, how she got to where she was, but also to understand that it's not impossible. And I had a really amazing meeting with her because I got there and I'm like, this is what I do, this is what I want to do. And she's like, have you done these 5 things, Will? And I'm like, no, I've not done any of those things. But that was my path. She'd just given me a roadmap, she'd give me a blueprint. If I go do these 5 things, the next conversation that I have with her will be completely different because I would have demonstrated some commitment beyond just talk.
Can you remember what those 5 things were?
Not
to put you on the spot.
So one of them was had I worked in a business that was failing that needed to be turned around. So I could already say I'd done that. But some of the things that I hadn't done, I wasn't on a not-for-profit board. I hadn't volunteered my time in sort of any on a project that I cared about. That was another item. I hadn't done any further study. I hadn't been to a whole lot of conferences. So there are a couple of things that were really useful.
So I guess moving forward to impact investing in general, obviously it's still very new, and there are still, we've spoken about this previously as well, there are still some misconceptions around what impact investing is. So again, for those people that may be very new to the term or to the field, can you share a little bit about what impact investment is and how, what the actual sort of focus is on?
Sure. So maybe I'll start at the most macro level. So, we've got traditional investments where the actors are seeking out profits. As a subset of that, you've got the responsible investment movement where people are seeking to invest responsibly in line with their values. And within responsible investing, there's a subset called impact investing. So that's seeking to invest for a financial return as well as a positive social and environmental impact. So it's like for every dollar that you're investing, you're actually creating change. Whereas in responsible investing, that could comprise negative screening. So it could comprise not investing in certain things, not investing in tobacco, not investing in weapons, and so on. One of the misconceptions about responsible investing, because it's been taking place for decades, is that investing in a way that aligns with your values is actually poor, results in poor financial performance. So there's a report that's produced by the Responsible Investment Association every year called the Benchmark Report. It's prepared by Ernst & Young, so there's reputable people without conflicts that crunch the data. And over the last 3, 5, 10 years, responsible investment fund managers have actually outperformed traditional fund managers. So I think that is really key to understanding that there are a lot of myths around this stuff, and you've really got to dig in to get the evidence to understand, what is possible.
Obviously some of the misconceptions are that it's similar to corporate social responsibility or philanthropy. Can you share how the approach is different? So
philanthropy is just undertaking an action without any return. It's just all about the social impact. It's not about the financial return. So you could have a business that generates a whole lot of money from mining, and they could decide to give all of that money away. Well, that's philanthropy. That's not impact investing for us. And they could do that in terms of dollars, just giving it directly to a charity, or they could undertake some sort of programs, and that would be seen to be more like corporate social responsibility. For us, what we're really looking to do is invest into companies that as they generate revenue, they're generating units of positive good for the world. So coming back to those examples of clean technology and education. So if you're generating revenue from, say, selling electric vehicles, well, that's better for the world because it reduces carbon emissions. Or you're developing an edtech platform that provides access to kids in developing countries to get educated, well, that's better for the world too.
How do you measure impact?
This is a black box of a question. It is there's a lot of amazing groups out there that have done some incredible work, and I can mention a couple of them. The Global Impact Investing Network have produced some frameworks called IRIS, which seek to standardise impact measurement across asset classes and across fund managers across geographies. There's also accreditation groups like B Labs, so that's a group that certifies that a business is a good social actor, in terms of how they treat their staff, their supply chain, what their governance procedures are like. A giant leap when we think about impact, it comes down to three core elements. So the first is we want to get to know the founders behind these businesses and really understand why they've created the business. Like, why is the problem that they're trying to solve important to them? And does the solution that they've created help to bring about positive social and environmental change? So it's a subjective test, but we're trying to understand the founders' why. The second element is trying to understand, for every dollar that's generated, is there good generated in tandem? So that's coming back to the example of, say, the EdTech program, so for every dollar that's generated, how many children are getting access to learning platforms that they weren't able to access before. And really, that's really core to understand and co-design that metric with the founders, that they can then report on that information to us on a quarterly basis that we can then share with our investors. So it's really on a case-by-case basis.
Sure. Is there, in terms of, I'm sure that you get pitched a lot of different businesses, both almost on both ends of the extreme, one with a potentially really strong sort of business model and high revenues, but potentially little impact, versus things with really high impact and potentially not as strong of a scalable business model. What to you as the investment manager comes first, if at all, or do they sort of go hand in hand?
For us, they go hand in hand. So we're seeking out commercial risk-adjusted returns from all of our investments from the VC fund. And we're looking for investments that generate a positive social environmental impact as well. And our thesis is that if we find these sorts of businesses, that they will actually outperform other businesses for a number of reasons. It's following really big macroeconomic trends around overpopulation, climate change, and so on. So, it's founders creating businesses to help address those problems. If there's a strong mission behind the company, we believe that these businesses will be able to attract the best talent. And, in the startup environment, talent is key. So being able to attract and retain exceptional people is just a must. And what it also does is it allows you to develop a really strong, authentic brand that you can share with your customer base. And I'll give you an example. Say, who gives a crap toilet paper, who take textbooks that were going to go to landfill, and they divert them from landfill and turn them into toilet paper. 50% of the profits go to build toilets in developing countries. Now, that's philanthropy, that's not impact investment. But for us, the impact is that waste that's avoided going to landfill. They have the most incredible customer base. People love their product. They're proud of their product. Cafes display it, in clear sight for all of their customers. And when a customer goes there, they see that brand. They love it. It's hilarious. They love the story. They tell their friends. They send boxes of it to friends and family for Christmas presents. It's just incredible. So for us, these sorts of brands have so much power.
Absolutely, and I want to come back to sort of the brand and the storytelling piece, which obviously I'm really sort of big on. But obviously you touched on some sort of macro trends that have happened. Like we were kind of speaking just before we turned on the mic about the sustainable fashion movement, for example, where 5-10 years ago the products were inferior, they were much higher priced, and it was a very hard sell into the market. Obviously, we're starting to see that change now. And obviously off the back of the success of companies like Tom's that have the one-for-one model, you're starting to see other startups that are deploying a similar sort of model, but potentially more as a marketing tactic versus a real sort of authentic drive to make an impact. Is that something that you screen for or look for, or are you just looking, again, for the overall impact that the business has if it were to work and be successful?
I think coming back to our assessment of impact, the intentions that the founder has to create a business are key to us. It's a subjective thing. All of our partners have a vote on whether the founder actually wants to create change in the world, and any one person can veto the deal if they don't feel that that's the case. And we have said no to deals in the past where it's stacked, the business model stacked, the team stacked, the market opportunity stacked, but we didn't feel, and there was impact embedded in the revenue model, but we didn't feel that the founders' values aligned with ours. We have passed on deals before. So that's our perspective. From the consumer's perspective, I've got a lot of faith in consumers and their bullshit reader. I've got a bullshit detector. I've got a lot of faith in even more faith in millennials, who are constantly plugged in, into social media. They're on the lookout for anything or anyone that is inauthentic, and if you're caught out, they'll just butcher you. So we are really trying to identify missionaries over mercenaries. That's essential for us.
Sure. And you touched on your own sort of process internally in terms of your venture partners getting a vote in terms of what you do decide to invest in. I'm curious to know, what does your investment process look like from potentially the initial meeting or someone sending you a deck to you deciding to make an investment in a company? And how does that potentially differ to a more traditional venture capital fund?
So we see around we'll see around 500 deals this year. About 60% of them will pass our impact test at first glance. So our amazing associate Rachel has a look at all inbound deals and makes a call on impact. So it's up to her judgment if something passes the sniff test or not. And then Rachel will review the businesses for their commercial capability to potentially achieve 10x for the fund. And on our weekly deal call with all of the partners, we'll debate the top of the list, and those that get through will invest time as a group to meet with the founders and dig into that question of why they founded the business, but also dig into everything else. And I think from there, everything pretty much looks very similar to every other venture fund, in terms of the process. So you're meeting and pitching us, and if we like it, we'll sign a term sheet subject to due diligence. What is different, though, is that within our due diligence process, we will need to understand the impact thesis behind the business. We'll need to co-design an impact metric to be able to measure the impact, and we'll also write that into their term sheet. So we take it seriously. And reporting on this impact to us is critical so that we can make sure that there isn't mission drift, but it's also critical for our investors who have trusted us with their money, that we hold our investees accountable because they're holding us accountable for the impact.
And you've made 4 investments to date in Your Grocer, Glam Corner, Sendle and Switch. What was it about those companies or those founders that made you invest in them versus the 500 that you potentially see a year?
I won't go through what other VCs will typically look for. I think many people have spoken about that on your podcast, who are very well equipped. But in terms of what set them apart, we felt that all of these 4 founders were creating businesses because they saw an issue in the world that they wanted to help solve that related to some sort of problem in society or with our environment. So starting with James Moody at Sendle. Sendle was not the company he thought he would create. He created a business called 2Share. The purpose of that business was to share end-of-life items with other people. The best example is baby stuff. So I've got a little baby, he's got a high chair, he's got a stroller, he's going to grow out of them soon. What do I do with that stuff at the end of the life? For us, it still has a life beyond our use. How do I get it from me to that other person with ease? And that's what 2Share was. Sendle was the logistics platform that enabled that to happen. Okay, so really, Sendle was about reducing overconsumption in the world through a very smart marketplace and logistics platform. And he is an absolute genius, by the way, as well. Morgan from Your Grocer, a lot of people don't know this, but he was one of the founders of Thank You Group. So Thank You Group originally bottled water, the profits going to some really important causes, especially in developing countries. After Thank You Water, he created Your Grocer to help the little guys, the little grocers, the guys that build our communities and help us to have lively and happy and healthy communities, to help them compete with the big players. So, David and Goliath story. But there's a lot of flow-on effects. So, those local grocers are more likely to support local farms, and local farms are really critical for biodiversity. So that's why we invested with Your Grocer. The third business is called Glam Corner. They're really interesting because they're taking on a lot of really bad behaviours around how we consume fashion. So fashion is the second biggest polluter in the world after mining. The numbers are pretty astronomical. Like in Australia, we're one of the second biggest textile consumer in the world, and 6,000 kilograms of waste, I think, go to landfill every hour or something. It's just crazy. So what they're trying to tackle is people buying single-use items from the likes of H&M and Topshop and for a special event, say for the Spring Racing Carnival, moving from that behaviour where you just buy the item once and then chuck it away, to renting an item, and renting a high-quality item that can then be rented out to others. So one dress on the Glam Corner platform could be rented out 20 plus times. And we think that's amazing. And the fourth business is called Switch Automation. 40% of carbon emissions come from the built environment. A lot of that is because buildings are pretty dumb. They chew up a lot of energy in air conditioning and lighting and so on. So what Switch does, it works with really big customers like Wells Fargo, Walmart, WeWork, Microsoft, and it helps the guys that run the buildings to identify where the problems are and allows them to fix them all from the one screen. So all four founders building businesses to help change the world.
Fantastic. And you mentioned that there's this misconception about because you invest in impact that there's going to be lower profit, but it's actually the opposite case. Can you what are your thoughts on why you think that misconception is there, and how have things sort of evolved or changed over time?
Sort of two-part answer to that. So the first part that I think a lot of people assumed that we will be investing in companies that will generate suboptimal returns. That's not true. You can see the people that we've co-invested alongside. So Ramsand and Black Sheep and Full Circle invested into Sendle, Tankstream alongside us into Your Grocer, and Airtree into Glam Corner. These are commercial VCs taking commercial approaches to these businesses. We're taking a commercial approach with an impact lens over the top of it. Why do we think that these businesses are going to outperform? Again, it comes down to attracting and retaining incredible talent. That's really important, and attracting a raving fan base of customers. That's really critical. Another element is you invest in these sorts of businesses that are willing to become B corporations, to be accredited as a good business. Well, they're typically going to have lower risk of some sort of issue on the governance side as well. And that's been proven out in the responsible investment movement over decades.
So you mentioned things around retention of customers and driving customer loyalty, as well as attracting hires, which is, as you mentioned, one of the biggest challenges for fast-growing companies. Can you share why impact businesses have those, associated people or feelings towards those companies?
So Deloitte undertook a study of 8,000 millennials, and 9 out of 10 people said that they believe that business, its purpose and the measure of success is beyond financial success. So I think this is just one data point around the expectations of both consumers and workers, wanting to find these sorts of businesses that they can be proud of, and we all work really hard in our jobs. We pour in a whole lot of energy, and if you have a really strong purpose and vision behind the organisation, you can build an amazing culture, and you can really harness the energy and momentum by building something together. And I think that people thrive on that. They're attracted to it. They're magnets, basically.
So obviously, when you're creating a business around impact, there's a very compelling story that sits underneath that. One of the things, I don't know if we've spoken about this, but I've definitely spoken about this to other people in the space, is founders generally aren't very good at telling their own story around a particular business. So you look at a business like Thank You, and it's really nailed its purpose and its why and its messaging that it gets across. And you can, as you mentioned, notice that through the raving fans and people that keep coming back and act as advocates. How would you recommend, whether it's an impact business or a tech startup, how can a startup find its true sort of messaging or story that will resonate?
That's I don't even know if I can answer that question, but I'll have a go. Well, I think it comes back to being authentic. So, linking the founder's why with the vision of the company is critical, and that needs to be authentic and powerful. How do you get good at storytelling? Well, I think part of it is talent, but I also believe in growth mindset, where you can basically just learn stuff. And this comes back to this, finding people who are really good at it, going to meet with them or emulating them or copying them, or if you can't simply do that, you need to hire the right people to achieve those ends. So at Impact Investment Group, we've got our head of communications, Fergus Pitt. He's critical to us telling our story, and Kai Loughran, our Chief Impact Officer, the same. These guys help us to articulate. We're all ex-finance, funds management people. They help us to tell our story.
So how, that it kind of comes down a little bit to self-awareness as well. People, sometimes founders just aren't really great at communicating as well, or everyone has their own strengths and weaknesses when it comes to that. And you just mentioned, you've got Fergus who kind of looks after that piece. How, at what stage should founders look to outsource or bring in particular skill sets into the business versus doing it themselves as an investor?
Well, I'm a self-development junkie. I'm always on the lookout for feedback, always trying to find ways to look into the mirror to identify the things that I'm good at myself or not good at, and then whether that matters or not. But also for our team, it's something that we focus on as a business. We're constantly trying to identify lessons that we can take from mistakes or failures. And I think that's just critical for any startup. If you're not doing that, I just can't see how you'll survive in the long run or flourish.
On that note, Will, thanks so much for your time and for sharing your insights and experiences. For anyone who wants to find out more about you or Giant Leap Fund, or say hello or get in touch, what's the best way for them to do that?
So our website is giantleapfund.vc. You can contact any of us directly. My email is will@impact-group.com.au. Just shoot us an email. We do office hours. At the moment, I'm doing them with Adrian Stone at the Dream Factory on Wednesday afternoons. Peter Cameron, one of our venture partners, undertakes them at the White House, the room we're in right now, on Tuesday morning. So come and say hi. You can book him through the Startup Vic website.
Fantastic. I'll make sure all of those links are in the show notes. Will, once again, thanks for your time.
Pleasure. Thanks so much, Rohit.
Yes. Thanks for listening to episode 73 of the Startup Playbook podcast. You can find the show notes of my interview with Will, along with a curated list of tools and resources for startup founders at startupplaybook.co. As always, you can join the conversation through our Twitter account. The handle is @PlaybookStartup. A note to keep an eye out for episode 4 of the Startup Playbook Hustle launching later this week with Giant Leap Fund portfolio company Your Grocer. In the meantime, don't forget to subscribe to stay up to date with our latest episodes. Thank you for listening, and I'll see you at the next episode.